Hello everyone, thank you so much for being here. I will be your moderator, as TJ has said, for this panel, Venture Capital in Africa, Trends and Opportunities. The panel will run for about an hour to an hour and 15 minutes. For the first 40 minutes or so, I will ask the questions on your behalf, and then after that, please feel free to ask your questions. One of our aims with this panel today and also this event is that you all connect, and I've seen and heard all of you speaking with each other and connecting, so please do feel free to ask questions and engage. And I hope you loved the food. I haven't had a chance to eat, but it looked and smelt great. Okay, so the panelists, could you please just introduce yourselves and tell us something that we may not already know about you, and tell us what you're working on. Just kick it off. Maybe Parminder, if you could start.
What you may not know is that I'm actually here on my 70th birthday. The irony is that on my 60th birthday, I was in South Africa. I was the CEO of the Terra Foundation and speaking to 1,000 plus entrepreneurs, reveling in the fact that what an amazing opportunity for me, what a blessing to spend my 60th in Africa and my 70th with Afribond. We've all become puppies of Afribond. So what am I working on right now, apart from thinking, gosh, how long more will I survive? But what I'm working on right now is I'm finishing a documentary series about African entrepreneur who made it from a trader to a conglomerate, because I believe one of the biggest things that's lacking in Africa is Africans telling their own stories. So this is a story of an African who made it in Africa. And the idea is that he shares the business principles that enabled him to grow from being a trader to where he is now. I'm working on lots of other stuff, but I'll stop at that.
Thank you so much for that, and happy birthday. Yes.
Okay, I don't know how to go after that. Okay, I'll just try my best. But yeah, my name is Sam. What do I do? Okay, I lead Startup Grind in London as a chapter director. So Startup Grind is a global chapter of entrepreneurs. I've got a chapter director from Accra, Ghana over there, John. Yeah, so I used to lead a chapter back in Nigeria, and now when I moved to the UK about 3 years ago, started a chapter. Joined the chapter, London chapter. Yeah, in London we're about 18,000 members. So if you're looking to find a community of founders, you can always come on. What do I do? I've won different arts for. I've done accelerator program, incubation program. I do mostly startup support and startup advisory. But right now I'm also getting into the building space, because I feel AI is very revolutionary. I don't want to keep coaching founders. I also want to play as a founder. So I'm building my own company called Parminder Vir AI. What we're doing is that we're connecting AI to existing AI to social channels. So we feel like social channels is going to revolutionize commerce in the nearest future, in the nearest decade. So how do you connect that with AI? You already use AI for customer support. How do you connect that with existing system? So we're currently solving that problem. Yeah, so pretty much that's a bit about me. Maybe outside of that, I also do a contract role with Meta on their reality labs team, helping them get more adoption in that regard. But that's a bit about me. Thank you.
Oh, thank you so much.
Thank you, Parminder, and happy birthday once again. What I'd like to say, probably definitely pale in comparison to my other panelists, but I'm Ope, and I'm currently a PhD student at King's College London, in addition to running Terra Trust Capital. In my previous life, I was head of the $1.5 billion head of investment risk for a $1.5 billion pension fund in Nigeria before I decided to come back to further my education. Currently, what I'm doing around my PhD is tied to the asset management industry and essentially trying to figure out how to get sustainable foreign direct investments, not portfolio investments, but foreign direct investments into Africa. And when you look at it, what I think is the biggest problem we have right there is property rights, understanding the rules of the game. The rules of the game are not clear, and people are not going to invest. I'll use a simple example that most of us here might know. Landmark. Landmark came in with $100 million, and then all of a sudden it's destroyed. They said that they wanted to get the road clear. And then after they destroyed it, they now said that actually their feasibility study said that they couldn't build a road there. And with that, 100 million it's gone down the drain. The problem is it's not just Paul's money that's inside the project. You have foreign backers. And so at the end of the day, what you have is a system where people are not sure if they're properly, at the very least, you want to ensure that capital is returned. But even beyond guaranteeing to a certain extent that capital is returned, how do you ensure that their projects perform very well? And so what I'm looking at in my PhD is essentially understanding how property rights affect, how perceptions of property rights affect the investment decisions of people and companies, which ultimately affect economic outlooks of development and growth. And with that, hoping that I understand how that change will be able to inform policy decisions that would ensure that property rights are better protected and at the end of the day drive investments into Africa.
Thank you so much for that. So we're in good hands. Everyone's very decorated, and we are going to learn a lot today from this panel discussion. So the first question I have, I know in terms of global financial investments, things haven't been what they were post like the pandemic. So between 2016 and 2021, we know that venture capital in Africa quadrupled. Hello. Can you hear me? Oh yeah, we're back. So if you could please just share your perspective on the current state of venture capital in Africa, and so now that things have started to be slightly on a decline, what's your perspective? Are we in a cool enough period, or is it just a reset that's happening in the venture capital space in Africa? Parminder, if you could please start us off.
Feel such a fraud because I've, 10 years or 6 years that I ran the Tony Lumulu Foundation and set up the Tony Lumulu Foundation Entrepreneurship Program. It was donor, DFI, sponsorship-led, and philanthropy, yeah? And I ignored the VC, and I felt that what I was doing was building the foundation, or laying the foundation with 1,000 entrepreneurs every year from across the African continent, 54 countries, and 54 countries and sector agnostic. I felt that what we were doing was seeding that entrepreneurial ecosystem, and it was for the VCs and the HNIs, the next, to then pick the winners from that, 1,000, at least 10-15% were going to succeed. I think in terms of, so I am now flipping, sitting here, but catching up with where has the venture capital, how has it changed the African investment ecosystem? It has changed it fundamentally. And what would I be doing now, today, if I was redesigning that entrepreneurship program? Would I still do it at the bottom of the pyramid? I think we're in a redesign rather than a reset in terms of who's looking to Africa. I think, post-COVID, yes, there was a boom. I feel that it's no coincidence that the decline, particularly from the West, UK, Europe, and America, coincides with also the political changes in this part of the world. And I think it's a wake-up call to African entrepreneurs, African SMEs, African business to say, how do we actually build sustainable businesses? So I think I'd like to think that they would now walk into the next, period, which is really the new scramble for Africa. We know China's been in Africa, we know Russia is already there, but Saudi Arabia, why did MBS wake up one morning and say, I want to give $5 billion for Africa, sub-Saharan African entrepreneurship development, right? He obviously sees something, right? So I'm seeing it coming from Qatar, it's coming from the UAE, it's coming from Saudi Arabia, it's coming from India big time, right? India certainly has a relationship, both an investment relationship, development relationship, partnership relationship with over 40 African countries. There's 54, as we know. So I think it's a correction, not a collapse. I think it's a movement towards sustainable value creation. I'm sure you've already heard that from a lot of the VCs here. I think founders are focused on economics, right? I.e. returns, right? Real revenues and scale, which is grounded in local markets. So don't tell me, I'm inventing something in Lagos and it's gonna really fly in London. Bullshit. It's like, how is it really impacting the local market? And one last point, I think the ecosystem, what I'm seeing is certainly the entrepreneurship ecosystem that I help to catalyze is maturing. And as a result of that, I believe a lot of those entrepreneurs who were seeded and have gone on to raise funds, I think that ecosystem is maturing. I think it's leaner, I think it's smarter, and I think it's more collaborative. And we'll talk more about that. So the best founders that I'm meeting today are not chasing valuation, which was the pressure in 2020 and 2021. How quickly can we get our money out? They're building valuable enterprises with a purpose and for Africa, in Africa. And I remember Bite was here from ODBA last year. He calls it, and I quote, investing beyond capital. Plugging startups, also the other big ecosystem change that I'm seeing is really startups being plugged into the corporate and industrial value chain. Sorry, that was a long.
That was great. Thank you so much for your insights. Ope and Sam, do you have anything that you'd like to add from your perspective on what's happening in the venture capital sector in Africa at the moment, or anything you've noticed or want to comment on?
Yeah, I think she has said everything, like all of the things I was going to say. So, yeah, I think we shouldn't also just focus on Africa. That's what many people try to do. Say, oh, Africa is declining, but there was a global decline. Like after COVID, when there was oversupply during COVID and all of that. So the capital had to be mopped back. There are a lot of companies, Germany, for example, Netherlands announced they were in recession all over 2022, 2023. So how can Africa fare in that kind of place? And venture capital is an asset class that's very, small compared to private equity and other investment there. So we had that decline globally, creating macroeconomic effect. So, but now Africa is picking back. I wouldn't say we're in a maturing stage in terms of the quality of investment happening. Investment are still happening, seed round are still happening. All of the developmental project are still going on at a record pace. So I feel it's a global thing, and yeah, I've got an Africa inside.
Thank you. Like what Sam has said, a lot of what is happening is global, and it's not just focused on Africa. I'll just give a slight example. Before COVID, we had a zero interest rate environment across the world. Now, what essentially this means is people have free money. Monies are not getting returns. When you even look at Japan, they had a negative interest rate. What this means is if you put your money in the bank in Japan right now, say you put in 100,000 in your bank in Japan right now, probably in a year's time, what will be in your account will be 99,000 because it's a negative. They were trying to spur growth. And so people were essentially investing in all over the world. Essentially, it's something that is called a spray and pray. You just invest in like 10 companies. Maybe you do 20,000 in 10 companies. The idea is that using the laws of probabilities, at least one of your bets will pay off, and then you'll be able to make money from all the others that fail. The problem that happened after COVID was the zero interest rate policy environment went off, and what you now started to do, what we now had was interest rates going up. So what you now have is traditional investments are competing for those funds with VC investments. Essentially, why would I, if I'm investing in, say, if I want to buy a bond, I'll give you an example. If I want to buy, if I want to invest in a US corporate bond that is BBB rated, if I add the treasury rate, which is roughly 4%, and then I add the risk on that bond, say another 4%, I can earn 8% a year. And over a 10-year holding period, I have 80%. So if I invest 100,000 in, say, a US corporate bond, by year 10, I'll have 180,000 risk-free. I can go and sleep. Well, largely go and sleep. The problem is you cannot go and sleep like that with a VC. And so what you had is these things now started to become more competitive. People started to look under the hood. Now, essentially, what are your revenues? Are your unit economics making sense? Also, another thing is when you have a larger interest rate. I don't want to go too technical, but essentially it disrupts valuation. So with a lower interest rate, valuations went higher. With a higher interest rate, because you have to factor in the fact that these monies are going to cost a bit of money, valuations go down. There essentially is a cost to capital now, so valuations go down. All of this affected the African investment space, and so it's not as if it affected all over. But now, in respect to that, what you now have is people are now going to look at fundamentals. Investments are no longer looking at, they are not going fundamental. What are the things driving your business? Does it make sense? Your revenues, does your revenue match your valuation? These are things that are now happening, and so it's not like I create a SaaS project, I'm going to do healthcare to whatever, I'm using an example, and then I say I'm valued at 100 million. And then beyond that, what you also have is some bad faith actors that I'm not going to go into, but they've also saw the pool for other investors. So these are the things, and we're seeing a more strategic outlook, whereby people are still playing in Africa, but then they are being more selective. The criteria to invest in these kind of transactions are becoming more selective.
Thank you so much. So from what I'm understanding is that the VC space in Africa is not experiencing anything different to anywhere else in the world. It's just people are being a bit more risk averse because they can get higher interest in other asset classes and they can go to bed at night and know that they're going to make money, guaranteed money. Okay, thank you.
It's almost like also bringing invisible others who are not here, but who I've had the opportunity to do here, listen to. Thanks to Sidi, I found myself in Tunisia for the Big Tech Africa, and Bite from DBA was there. And I remember, he stood and he spoke about, tough markets don't kill opportunity. So yes, it's a tough market, but it's not killing opportunity, which is what you're saying. They filter it, which is what these guys are doing. What remains is fundable. And what he's saying is, for him, I think it's really a fantastic reset and a redesign for African entrepreneurs who were chasing valuations, who were behaving as if they were in the Silicon Valley, but in Africa, right? We're not, right? And who were really just modeling the American model, right? And there's another, he talks about traction before narrative. i.e., I can tell a really good story, guys, and before I know, I walked away with a check. What the hell am I going to do with that check? Is not, yeah? Burn multiple before vanity growth. I mean, we saw a lot of vanity growth in that time. Governance, there was zero governance in many of those enterprises, rather than being led by charisma and personality and proof before vision. So I think this is an opportunity for African entrepreneurs and African SME to really get their game and house in order.
Thank you so much. So we're seeing an emergence of new forms of venture capital funding. So for example, tokenized funds, revenue-based models. From your perspectives, which of these newer structures of VC funding do you see gaining real traction on the continent and why?
Okay, let me go first because I have short things to say, so I'm just going to say them pass over the mic. Yeah, so I feel we need everything at this stage. Africa needs everything, right? And we're seeing a mix of everything. I work more in the accelerator space, like accelerator incubation space, like building programs and startup support. And right now you're seeing fundraise, like if you look at the fundraisers you're seeing on TechCrunch, they're mostly a mix of asset class. You see, raising 10% venture capital, raising 50% debt funding, raising another percentage in like grants. You see, like for example, I do a lot of like pitch battles, pitch events, and I don't know a lot. So for example, CD year, I was a programs director of one of the programs that just concluded in July, where we went across 10 cities across Africa, Europe and America for the top AI companies. You see companies that are, one of the founders, I don't know if I can say, okay, I'm not live stream, I'm not going to quote it anywhere. One of the founders already raised $2.2 million and they're competing for like a 100K grant prize money, right? Fine, they say they're competing for the reach and for the impact because it gets them into Silicon Valley because we did the demo day in Silicon Valley. But that's what you see. They want to, you're raising $3 million in your pre-seed. You want to add different, bucket of money. If it's 100K free money, you add it to your round, and that's something. So that's the level of competitiveness we're seeing from this level of founders. And like I said, I think we need everything. So I don't know what's the process.
Thank you. One of the things we like to do is we like to go in with everything. Well, we figure out the transaction to deploy, to understand how to deploy. There's no single funding that is correct or right all the time. So it essentially depends on what you're trying to do. For example, we might do a pure equity if say a transaction is really we have full faith in a transaction. We might slightly do a mix of equity and debt if there are some things we want to ensure. First and foremost, we go in with that. Or we might do a straight debt if our risk threshold is high, if we believe that the riskiness of that transaction is slightly too high, but we want to still participate. In that instance, we then look at how do we protect ourselves, what collaterals do these businesses have. And even beyond that, when we even look at funding, it's no longer hands-off like it was before. One of the things we try and do is strategic investments where we go in with our co-investors and we try and capture the finance department. We go in for aim to have a seat and control the chief finance CFO position. And this gives us a finger on the pulse. You're not going to be spending our money anyhow. At the end of the day, there are so many things that have happened, and these controls are necessary. I'll just debate a bit. I know someone in the past, it was unheard of for VCs to take their founders to court. It's currently happening right now. Because founders that they have funded to court. I think 3 years ago, some people got money from, I'm not sure, I won't mention where they got money from. They got $2 million, but people who know the guys that write $2 million checks already should know who these guys are. They got $2 million. They were a set of ladies. And then 3 months later, they said that due to irreconcilable differences between them, that they decided to split. So what happened to that money?
Yeah.
Wow. I think Sam, you were alluding to that just now when you mentioned the bad faith actors. But I think it's important to understand that VC money isn't free money. There has to be a level of integrity when you're taking other people's money and you want to deploy that into your businesses. So I think it's good that, there is a precedent being set that if you take the money and you don't do what you say you're going to do with it, for whatever reason, that there could be real life consequences. So that's interesting to know. Sorry.
No, I think, again, talking to you a bit, I think you can do more than just, all the things you're doing, which is really governance, to ensure that your money is properly spent, because your money also comes from someone else's money. You're not printing it, are you? Someone else is investing in you, so they're holding you accountable. But I think one of the things I got very excited by the big tech in Tunisia was really how the corporate VCs and accelerators are bridging the kind of industry needs with startups, right? And when I use the word startups, I mean really, really fundable enterprises that may come across your desk as well. I feel that the VCs, especially African VCs and also obviously international VCs, it's not enough to just keep writing checks. It's not enough just to keep doing development, as now some of them talk about. We're going to build your capacity, whether you're weak in communication or governance or recruitment or talent retention. But I feel that those enterprises now need to be also plugged into the corporate's value chain, right? Imagine if we had a whole bunch of entrepreneurs as startups and we were plugging them into the Dangote supply chains, right? We were plugging them into all the supply chains, both from the multinationals coming into the continent, but more importantly, African, major, like the guy who's got the documentary I'm making, we're plugging the entrepreneurs into those supply chains. Because the reality is some really, nice guy in Silicon Valley is tracking these developments and saying, oh, Flutter Wave, that looks like an interesting one. Haystack was the other one, right? Yeah. Let's just buy them now. Let's get them now. And then, and then they own them. And then before you know it, it was an African that started in Africa, but ends up there. But, we have to look at supply chains and the value chain.
Thank you so much. So let's just...
I just want to add something just to support what she's saying, right? And you're seeing alternative investment everywhere as well, not only in Africa, right? So, for example, I don't know if I can classify this as an alternative investment, but you're seeing deals. I don't know anyone following OpenAI deals with with the like of Oracle, with the like of Nvidia. That's an unprecedented kind of deal, right? It's an alternative investment. You're investing in another company for their, instead of collecting cash, you're investing in them for their compute, right? So they're going to give you compute. Instead of, you're going to value that compute in terms of investment, and you're going to use it and get equity in the future, right? Same way with the way accelerator programs work. You come in, go through a program for 6 weeks or 8 weeks, you get a particular amount of money, you get preferred shares in equity, but you get that level of training and you get that level of training from them and also exposure from them from their demo day, right? So that's the level of alternative investment. So it's not something that's new, and I think it's something that startups should encourage. But like he said, it has to be, you have to look for what works for you, right? Yeah, that's what I think.
Thank you so much. So I wanted us to change track just a little bit in terms of the trends that we're seeing. We all know that fintech is like the big thing and has been for a while. I think all the 9 unicorns that we've had in Africa, I think 8 of them have been fintechs. So from your perspective then, which other sectors do you believe will define the next wave of investable opportunities in Africa, and what fundamentals make them attractive from your views?
Should I go first?
Yeah.
AI. Yeah, I think I'll sound cliche, but I think that's what is going to change the game for a lot of companies going forward in this decade, right? I think it's as important as the internet, right? When the internet came in, right? A lot of African companies didn't even know internet existed when the internet came in, right? Because we're decentralized, because we have to like set up infrastructure like telecommunications and all of that before the internet to be there, for the internet to be fast to what it is right now. But right now, we are on a level playing field because the internet is there, the infrastructure is there. You can be in Ife or like a remotest place, maybe Banjul, and Banjul is not remote, but like you can be anywhere and you can connect to the same OpenAI API that someone in London or Shoreditch is connecting to, right? The same Anthropic API that you can use to build companies. So I feel it's going to revolutionize a lot of companies and it's going to work with existing systems. So we're going to be seeing a lot of investment in that. We've already seen global investment in that, but it has not like, really shown in Africa yet, right? But I think that's what I am betting on.
Well, no, I mean, you said certainly AI. We know, for me, technology is an enabler, and AI is just another tool in our toolbox, right? I started making films in the analog age, where I didn't have an email, a mobile, or any of this stuff, actually. It was just landline. And then we got fax machine. None of you would ever know what a fax machine is, right? I then embraced the digital, and you saw how that changed my industry, which was media and the creative industries. Now I'm embracing AI, and a friend of mine in Nigeria, Obina, has just launched probably Africa's first AI film festival, the Niger AI Film Festival. So Nigerians, as always, are saying, okay, how are we going to use AI to tell our own stories, right? I'm not going to wait for some studio to offload some cash. I mean, it costs a lot of money to make, conventional films, right? But I know some of the most powerful film stories are going to come out of Africa, and they're going to be AI. So I'm betting on the creative economy, certainly as being one of the most fast growth sectors. It always is, it always has been. It's just the VCs sadly don't see us as investable value propositions because they can never see, well, okay, how do I get my money back? But I'd love to come to the premiere. I say, well, you can't come to the premiere if I don't make it, right? So I think film, fashion, gaming, and I saw that in the Sierra Leone, again, thanks to he's a really amazing connector and networker, right? So he invites me to this crazy good Sierra Leone event last night, which is all about positioning Sierra Leone as the destination, which it is, by the way. Nigeria, wake up, you've got competition. As a next destination for everything, from tourism to business to the creatives. And one of the things we said was one of the biggest imports out of Sierra Leone to the UK was creative talent in fashion, in film, and in music. So, yeah. Africa's advantage is its creativity. When it's paired with technology, it becomes unstoppable.
Thank you for that shout out to Sierra Leone, Parminder. I'm a Sierra Leone myself, and I was also at that event yesterday. And if any of you haven't been to Sierra Leone, you please go. It's one of the most beautiful places in the world, and it's ripe for investment. So please do check it out if you haven't already. Did you want to say anything?
Yes, I did. Just to add to what Parminder said around media, given the fact that a lot of Africans, now in fact, not just media, a lot of discretionary goods that people use their spare income essentially to purchase. You see a lot of Africans leaving the motherland, they're coming to Western countries, and they miss home. They miss the movies they watch, they miss the quotes they watch. And let me give you an example. I was watching, I think it was on Instagram a couple of months ago. It was during the prom season. Yes, and then you start to see African designers ready to wear. These girls doing proms, they're going out there. I mean, you see any dress, for example, and then it's going for $150, and you ask yourself that, wait, would people back home be able to afford this? But then you realize that the people back home are not the market. And so people, you see, ready to wear media companies. There's a media company we backed, for example. These guys have roughly 5 million viewers a month. Yes. The kids. The kids. The kids. They have 5 million viewers a month on their YouTube channel. And beyond, we might look at them as a media company, but these guys have, for example, are going into they have different revenue lines. So that's just a front-facing thing. Behind me there, they have gaming. Behind me there, for example, their books. And I'm promoting these guys shamelessly. These guys have their books in Corona Secondary School. For people that know, their books are currently part of the curriculum in Corona. They have an edutech platform. And these are all the things that when you look at media, it's a channel to other things. And so we're looking at media companies that go beyond the necessary what meets the eye in supporting that. And when you look at healthcare is also very important. So as Africa, if you look at Africa as a whole, I'm going to what Parminder said about AI or technology being an enabler. When you look at being able to aggregate individually, when you look at the distribution of doctors, particularly with the Japa syndrome in Nigeria, a lot of doctors are immigrating, and so we have to be creative about solving healthcare issues. And so having software services, healthcare software services that help solve some of these issues is something that we're looking greatly at. So in essence, discretionary goods that their target markets are outside of Africa, and then say healthcare in Africa are things that we are looking at.
Thank you. Just to add into that as well, I mean, I'm sure you're doing climate tech, you're doing agri-tech, right?
Yeah.
And also biotech. I mean, those are really, that's where the shift is in terms of investment using AI as well. Thank you, team. Hello.
Okay, I think it's working now. It seems like the common thread from what all three of you said was the creative arts and creative thinking to solve our problems. So if there's anyone in the room, because obviously intellectual property has to come into play when we are creating things so that African startup founders can protect their hard work and be able to generate income and revenue for years and years and not have their ideas stolen. So people, maybe that's something that people could look into, like IP lawyers or individuals that want to share more information out there so that people know that there is a thing about, called intellectual property rights and design rights, etc. So that the startup founders know how to protect their inventions. Or were you going to say something?
Just wanted to add in terms of that, just to also talk about the media space. Kunda Kids, for example, they showed Nelly and Ashanti used them for their child's first year birthday. It's something where you see African entertainment going beyond what we traditionally made it reach. People are starting to see our art, they're starting to collaborate with us. And yes, so just point that out also before I move on.
Yeah, thank you so much. So investors often cite political volatility, regulatory inconsistency, and foreign exchange issues as major barriers to investing in Africa. From your experience, what steps have you seen government, regulators, or ecosystem players adopt to reduce these perceived threats?
So, the problem is we expect governments to solve everything. The government is not going to solve all our problems, and we need to be creative about solving it. I'll look at, I'm not sure if Mr. Tony T who is here, but I think he has gone. But when you look at a long climate, in, there are companies that are now going into bilateral agreements for carbon credits solutions. Normally, when you trade carbon credits, I don't want to get too technical, but if you trade it in the open market, it's anywhere between per ton. It's anywhere between say $4 to $5 per ton. But when you enter a bilateral agreement, this can go as high as $70 to $60 per ton. And what a group of I'm not sure if there's any Ghanaian here, but what a group of founders of people within that sector did in Ghana was they got their governments to get into a bilateral agreement with Switzerland. Essentially, I think it's roughly 60. The agreement, the bilateral agreement they had carbon credit is roughly $60, and it pays the government because the government is now going to get 20% of all whatever these founders, whatever these climate investors, these founders do. And so essentially, it's a system that was led by founder or businessmen interventions that the government supported and ran through, and they were able to close on it. So the government is not going to be able to solve all your problems. But if you're able to front load your problems to the government and lobby them to do the right thing or do what would favor everybody at the end of the day, I'm not sure if there wasn't anything on the table for the government. But at the end of the day, everybody reached an agreement where they could create more value and government could also benefit from it.
We don't clap for panelists here.
God, I hate this risk. When you do Africa, there's two words that always follow. Africa, risk, corruption. You think, come on, give me a break. It's risky here. It's risky everywhere. It's more risky to be in America right now, right? So I think risk is a narrative, and I feel the real story is resilience. And that's what we have. And secondly, that is the private sector across the African continent. If in 20, that needs to be unleashed and that needs to be supported, right? They're the ones who are taking the risk, and we are here as private sector leaders. We're not here as government leaders. If somebody from any African country, any government in Africa had said to me, Parminder, at the age of 58, come and design and run an entrepreneurship program, I would not have gone, right? But because it was a private sector leader investing his own private wealth in supporting African entrepreneurs, it was 3 seconds I think I took before I said yes when he asked me. I also think, I think there's a lot you guys can learn from investors, VCs. Again, another amazing character, amazing investor that I met. Re-met again in Tunisia, but I've known him from Nigeria, Idris Bello of Loft Inc. Capital, right? He's invested in 150 companies. It's a Pan-African fund. He is in partnership with Smart Capital, which is a Tunisian fund, right? And they are investing, and they're managing that so-called risk through trust, through mentorship, and through networks, right? They're betting, as I said, they bet on 150 companies, and I have a list of all of those companies. So they're betting on resilience, on networks, and not on spreadsheets, yeah? And I think, for me, the greatest risk for us in the West, and that includes us as the diaspora, is sitting out Africa's growth story. I think that's a much bigger risk than not doing anything about it.
Acting, clapping makes you also acting. You know, when you clap, you encourage the panelists, it also makes you active, right? Thank you.
Okay, so information gaps are still a major friction point in African deal making, and many jurisdictions lack searchable registries and reliable credit data. So, in this environment, what can founders do to build trust? And do you have any anecdotes of this happening, or where founders have taken initiative and made sure that they built trust in the whole in the system for themselves rather than waiting on anything else?
Yeah. So it's a very tough fundraising climate out there, right? And this is what I tell founders. I had a call with a founder last week, and well, he's a UK founder, and I walked him through the template of what he needs to do. So, and this is what I tell founders: like, if you're fundraising and there are people that are fundraising that are like outsiders. There are people that are fundraising that are like insiders. Like, for example, he's an insider because he has worked in like. He has worked in the finance environment, a pension fund and all of that. He wants to raise fund, he just needs to like call his contact. Or if it's someone, it's also not that easy. I'm not like trying to gloss over that, but I'm just saying that it's going to be harder for an outsider to raise fund than for an insider to raise fund. So if you're like an outsider or you want to raise fund for a venture, right, the best thing is to like build in public. That's what I tell founders, right? You want your investors to know about you even without you meeting them in the first place. So you have to build in public. I know it's kind of challenging. So for example, you're working full time for a company and you're doing this and you're doing multiple things at the same time just to be able to keep the life running. But in one way or the other, still find a way to share your story, share what you're doing, put it in public. Another thing I was going to talk about is also having a community. So it's very, very important to have community. Like, there are a lot of communities out there. I run a community, so I'm going to give you a few stories. So when I was in Nigeria, I used to run a startup growing community in Ife. Ife is like Obafemi Awolowo University. It's like a campus chapter, but it has a very dense talent, like population of founders. Or if you look at say 70, I would say 70. I would just say the most funded. If you look at the background of founders that have been funded in Nigeria and look at the schools they came from, many of them came from Ife. So back then, I was running a program like 2017, 2016, bringing founders together. There's this story of a founder that he met his co-founder at one of the meetups that we put together. Then we brought in a YC, one of the first YC batch that had Africans. So I think the batch of Paystack. There's one of the founders there called Inka Kudi AI. I don't know if anyone knows Kudi AI. They're now Number. They are not known as Number. We brought this guy to come talk, and he gave us like the blueprint of how we got into YC. Then 2 years after these guys got into YC, based on that blueprint, they were able to build their system the same way. They were able to build connection, talk to people, and they ended up raising, I think, close to $1 million, and they were just 17 years old. Right, that's one of the most remarkable stories I share every time. Just by being in the community, just by being in an environment, and it does this thing to you where if you are in an environment like this, you meet people that are risk takers because it's only delusional people that start companies. I tell you. Right? So you need to be in a room of people like you, right? Not, people in a room of like, maybe PEs or advanced finance people that tell you, oh, the idea cannot work. That's what they will keep telling you. But if you're in a room of other delusional people, it gives you that, sense of community to be able to start what you're doing. And the other thing, so I do start going in London, right? I'm the chapter director. Investors of different classes have walked up to me at different times to say, "Oh, Sam, can you introduce me to one of the founders? Can you introduce me to one of the top founders?" Or they just give me a spec. I had a dinner with an investor about 2 weeks ago. Give me the spec of kind of venture is looking to back. And I'm able to say, "Oh, talk to this person, right?" That's the best way to also use community as those are just practical steps. Yeah.
Thank you so much. So to summarize, trust is built. So to summarize, trust is built by community and transparency.
Yeah, showing your work.
Showing so everyone knows what's happening. You can connect people to the ecosystem, and you're more likely to trust somebody if they're referred to you by somebody else rather than a cold call. Okay, we're running out of time, so I'll ask some questions quickly, and then I'll open up the floor to you for Q&As. So I'll skip some of the questions, but I think we need to discuss exits because everyone always talks about exits in VC, especially in Africa. Okay. So I think this might be the last question, one of the last questions for me. So the fact of limited exits in African venture capital is often cited as an issue in investing in Africa. And African startups completed only a few dozens of exits in 2024. How do you counsel founders then on managing LP expectations and exit strategy alignment?
I think in terms of this, counseling founders, we also need to counsel their backers also. Now, in terms of this, what we try and do, we've learned from other people, other mistakes, and so when we go in, we try and look at the transaction, we look at the end from the beginning before we even invest our money. How are we going to get our money out? Or how are LPs going to get their monies out? That should be the foundation of investing first and foremost, ensuring at the very least capital security. And then when we look at what is out there currently, it's mostly secondary sales. Africa has not had a major IPO. And you look at the Nigerian stock exchange, all the stock exchanges are bleeding. They actually are doing quite well, but they're also bleeding in the sense that no major, I'm not sure when the last major company IPO'd in Nigeria. I'm not sure, I might be wrong, but I don't think anything has really, maybe one or two names have come in. And so it's about founders and even VCs and CPE guys coming together to structure transactions. What exactly are the exit opportunities? Who wants to invest? I mentioned this earlier. The Nigerian government over a couple of years ago ensured that pension funds could invest or mandated that they have an Islamic fund, specifically for Islamic banking products. Not many people are looking at that. More recently, I think 2 weeks or 3 weeks ago, they allowed PFAs investing, pension fund administrators, they allow them to start investing in derivatives. How do you structure your transactions to go into those? These are exit routes that even the founders need to start educating yourselves on. And beyond going into it alone, you need to start, I've seen more founders going into transaction fundraising, which is also tied into exit at the end of the day, going into fundraising with more traditional fund capital raisers. And this is because these guys are able to understand the transaction, structure it in a way that will please, financial providers. Let them know that, okay, these are based on your revenue flows, this is how we think your repayment, if you're going in for debt funding, this is how we think your repayment trajectory or capacity, and all of these things are things that I see or I think founders need to work on in collaboration with the VC or their funders, any of the various funders, to at the end of the day provide more clarity to the everyday investor that this is, if you put in X amount, you most likely, we can't guarantee transactions at the end of the day, but sharing more information, shedding more light provides a level of trust that would provide one, funding, and two, exits. Because at the end of the day, your exit is someone buying what another person is selling.
Thank you. Did anyone else have anything to add, or can I move on to the next question?
I would just say we need to stop seeing exit as a single event, like a single level event, right? There are a lot of different. If you look at the mature markets out there, there's a lot of acquisition. There's a lot of acquirers. If you look at my company Meta right now, a lot of acquirers like acquiring AI talent from different people, different companies. So and everything is just like it as long as it plays to what the backers are looking for, it plays to 10x or 100x of investment, that's what matters. So it's changing a lot, and I even look at it with another lens, with define exit in another lens. I feel like we would see that Africa is not doing it badly.
Thank you. So this is the final question for me, and then we'll open up the floor for Q&A. Just one more, one quick one. So what are some of the most important lessons that you have learned whilst operating in VC in Africa that you'd like to share with us?
Me? Working in VC, I know a lot of VCs. I don't know, I think the most successful founders that I've come across the entire continent, I think they are ecosystem builders. They're part of an ecosystem. They're not standalone founders. They've had relationships with accelerators. They have relationships with, they're adding relationships with corporates and with investors. So I think it's all of those elements working together that I think is, in terms of real success, right? That is what's going to produce that transformation across the continent.
Okay, I'm not a VC, so I don't know how to answer that question. So, but what I can say from my own lesson, like building support, I think I was having this conversation with John maybe on Tuesday, and we're talking about how Africa needs more support system, right? How, LPs right now in VCs are like, many of those LPs are like DFIs. Like, why can't we have pension funds? Why can't we have other types of fund that can, go in as LPs into VCs, like venture funds, and that way it structures the fund to succeed, right? Not like, we're chasing impact. Chasing impact is great, but we also need to get to the place where we need to also, add and play part in terms of partnerships. How do we make sure that they have partnerships set up for them to help them succeed? How do we connect them? We are diaspora. So I am a diaspora. I won't be generalistic. I'm a diaspora. Like, for example, how do I find opportunities here in the UK that companies in Africa can benefit from, and also be able to use that to scale? So I feel like we all have to play our own part in the ecosystem development wherever we are at. That's one of the lessons I have learned with my career.
Thank you.
Sure. Thank you. There are two things I'd just like to point out shortly. One is, do not have group mentality. Do not follow the multitude to do wrong. My dad used to tell me that from a young age. And it's essentially, there's a lot of group mentality in VC investing. So you see them, a very hot deal comes in, and then everybody does their best to invest in a transaction because the deal is hot. Without mentioning names, a lot of people have been burnt in a healthcare system, in a healthcare startup. That has that actually a lot of people are really passionate about. And some people are just any amount. And this, number one, increased the valuation of the company unnecessarily. And when it collapsed, a lot of big names were hurt. And I had a couple of conversations with these guys, and they just said that for visibility, they wanted to invest in those transactions. You're playing with people's money on visibility. That's not strategic enough. Let me use that word. The second is in collaboration. How exactly do you help everybody succeed? If you look at this as a table of people eating, you cannot be the only person eating. Everybody will be looking at your mouth. You need to ensure that everybody else is eating. How do you ensure the retail guys coming? Well, first and foremost, how do you ensure the founders accrue the benefits that should be accruable to them? How do you ensure that LPs, and even in looking at your LPs, something around Africa also needs to be done in terms of when you deploy capital. You need to, a lot of founders are focused on FX capital inflows. The businesses are not able to support FX. If you're earning in Naira, and if you're earning in Naira, you lose and you raise in FX, except if your revenue is your revenue gains are running at a very superb rate. The valuation is going to capture you. So, looking at, and this is also speaking to PFAs, for a long time, Nigeria's pension funds have not been able to invest in some VC transactions because these guys do not want to raise in Naira. But these guys are willing to, PFAs would invest in Naira if you come to meet them. And so it's about people that are either advising these guys to structure their transactions in Naira, or even they themselves thinking about creatively about who can I meet to get money. And that goes along with collaboration and also more transparency. These are the things I've learned.
Thank you so much. So, I want to open up the floor for Q&A. If you have a question, please could you just stand up and say your name and where you're from and ask your question first.
Hi panel, my name is Toby. I usually say I'm a product manager by day and a children's author and entrepreneur by night. Great panel, thank you very much for sharing your thoughts and experience. My question is more directed at Parminder. You said something very interesting about connecting like startups or SMEs to like the Dangotes or the conglomerates on the continent. My question is, how open are these conglomerates to that idea? Because you often get tension between sort of the youth and the elders on the continent, whether it's in politics or business. So how open are they to that idea? Because it seems like it will be a great collaboration.
Oh. I don't know, but I think the first thing is to begin to ask those questions and those possibilities. I never thought about that when I was building the entrepreneurship program. It was about mentoring, skills development, capacity building, and giving and providing the entrepreneurs with $5,000 seed capital. Many of them went on to multiply it into millions. Yeah. But I realized, and literally it's thousands of entrepreneurs, 300,000 applied in the last, when I was there in 2021, and we selected 1,000 or 3,000 or 4,000. But the point I'm making is a lot of those entrepreneurs are actually building products and services that the big corporates need. And what I noticed when I went into the corporates and also into the government, when I would take the entrepreneurs and present it to them, that they were outsourcing all of their needs to China, India, and other parts of the world. And I would say, but hang on, you have a software developer here. You have, right across them. You have a drones and, manufacturer here. He just needs investment in order to do it. So I think now, and this is thanks to Citi again, the opportunity to sit like you guys in an audience and hear, like this, I don't know, Citi, you might be able to talk about it, plug and play. I was intrigued by their model, right? And I noticed that guy from Djibouti, they're all talking about, no disrespect to the accelerator incubator program that I developed and designed, and there are many, many others. But I just think, my God, what a gap that we missed, which is actually is taking those enterprises and taking them to the value chains and supply chains of the pre-existing businesses and telling them to stop outsourcing stuff and start engaging. Because otherwise, the other thing I noticed across the continent, entrepreneurship became a lifestyle. There would be entrepreneurs who would stand up and say, and tell me they were on their 10th entrepreneurship program, and without once mentioning what was their business. And that's because, everybody was looking, DFI and, there was a lot of money being poured into the ecosystem without the end product, and an entrepreneur is only successful if they're actually making money out of their product and service. You can only do that if the supply chains and value chains are there. So does that answer that? So I will, if I get to meet Dangote again, that's one of the questions I'll ask him. I'll tell him.
Thank you. Who else wants to ask a question? We've got time for 2 questions. Okay, you.
Good afternoon, everyone. Good afternoon, panelists. My name is Ope Simpson. I have a couple of questions. One is directed to Sam. You mentioned when she asked a question about what's the next big thing, and you just said AI, right? I really want you to more or less maybe clarify a bit on that. AI itself or AI-enabled business, because personally, I don't think Africa can win in that space because you the kind of funding that's going into that space, especially in the Western world, right? Google has poured money into it. Everybody has done that. Somebody spent about $300 million to be able to even bring someone on board to build their AI and all of that. And someone is in Lagos building an AI company for maybe less than $200 or even $2 million, right? Can that person really win, right? So I'm just looking at the long term. Are we not looking at another tech bubble where a number of companies will just go out of business, right? People have spent a lot of money building something that at the end of the day may not likely see the light of the day. So I need us to clarify that. I want to believe that okay, I'm a founder, I'm building something that can take AI enabled. Today I'm doing pitches, I'm doing selling emails, I'm doing a number of things, and within a short period of time I can do all of that with AI as my partner, right? I don't have to really do so much in that regard. So I need some calculation in that regard. Can AI really win in Africa, right? AI builders, founders that are just building coding for that can they win? And that is one. My second question is about scale and about sustainability. About where to the panel, any of the here. Just I've had responses from a couple of let's say accelerator or something that has to be about scale. That is this business really scalable, right? And personally, I believe that years back, maybe if you are building a business or you are building a startup in Africa, you need to look at that scale immediately, right? So, for example, today, I'm sorry I'm taking a lot of time. But just M-Copa is in their 13th year and they just made their first profits, right? A couple of bad guys. I don't think Flutter is even profitable as today. So what do we solve for first in Africa? Sustainability or scale? Because if I don't have VCs pouring money into my business every now and then, I'll run out of money and that business goes out of. So I need some clarification in that regard. Thank you.
So in the interest of time, is it okay if we just answer the first question and maybe you can pick up the second question separately?
Yeah. So for the first question, right, I have context. That's why I said AI. I didn't go deep into that context, but I'm going to share a bit about it. So I'm just going to give like an analogy. The first analogy I'm going to give, I study history a lot. So in the early 2000s, there used to be these guys, when the internet was like booming, there was an internet boom during that era that crashed, right? And that's where Amazon, the likes of Amazon and Facebook later came from. And a lot of companies died. But telecommunication companies were the companies like right there at the edge of, they're like the $4 trillion company right now. They're like the hyperscalers right now, telecommunication company, and they were trying to scale into the internet. What did they do? A lot of companies came out that era and tried to internetalize, if there's a word like that, internetalize America, right? They started building cables because they felt like if they own the fiber optic in the ground, then they own the market. They're able to own internet, to say, oh, I can switch on the internet and switch on the internet. And so they over invested in that era. They over-invested in internet to make internet possible. But imagine if internet exists today and the internet speed is slow. The adoption is going to be low. Nobody's going to adopt it, right? So, but can I tell you that within 5 years, all of those companies died, right? The fiber optic is there, right? It's there. Well, they all died because when the boom went off, the money wasn't coming anywhere. The tap closed, so cash wasn't no longer coming in, and they all died. But what they built was what Amazon was able to build AWS on top of, right? Google was able to build GCP on top of. That's where we started having Kubernetes, we started having cloud businesses, and the internet became something that the infrastructure has already been built. So I'm going to answer your second question first to say, the first thing, instead of scale and sustainability, from African standpoint, I think the first thing we need to build is infrastructure. But when I'm talking about infrastructure, there should be good internet, there should be good, like the after deal should be the trade deal should be well connected, trade should be well connected. I should be able to bring goods from Sierra Leone and enter African ports. I should be able to sell something. I want to travel. I don't have to travel to Belgium to come to an African country. That's what I think needs to be done. But to your first question about AI, so I ran an AI accelerator program where I went to 10 cities to do pitch battles. So I only picked AI companies, right? I went to Lagos, Accra, Ghana, Nairobi, Berlin, London here, Seattle, Toronto, Boston, San Francisco, and one other city, right? So that's why when I said I had context, right? I met, for example, when I was in Boston, I met students from MIT and Harvard, and what they were building, I know that it was better. No, it's
I just don't have an argument.
yeah.
Because, I don't think that's his question. The reality is, the AI, there's only two players in this race, and it's China and it's the US, okay? And they're going to blow each other up, seeing who's going to spend the money.
No.
China is being, no, but can I just finish? I don't think Africa or India is anywhere near competing. The sad thing is Africa is what's providing the raw material to enable both of these two people in the race, right? But I totally agree with you, which is that what is the Africa, and there is a ministerial summit, there is a ministers came together, and I was a part of that last year at the Africa Tech Festival to look at a Pan-African, an Africa-wide AI strategy, okay? Policy and regulation. And what we came to was really around data sovereignty, around and the whole question, will Africa be consumers or will there be innovators?
Yeah.
I believe that Africans will be to a greater extent consumers, but it's really, as you said, this is another bunch of tools and another platforms on which Africans can innovate. And I believe, my final is the Africans who will show the way in terms of how you innovate on those platforms, which is exactly what you okay.
Yeah, so that's what I'm saying. Please give her a round of applause.
Thank you very much.
Yeah. Okay, I can chat with you later, but what I'm saying is just the application layer. And that's what I'm talking about. I'm not talking about the infrastructure layer, I'm talking about the application layer.
Amazing.
That's what I'm talking about.
Well, thank you so much. If you can join me in thanking our panelists.
No, thank you all. And if you saw me, sorry for rushing. It's just we are short for time and we did have one last panel. But I really appreciate just the different insights each person had when it came to the VC ecosystem's growth.